Welcome to the 40 Finance channel. What I have here for you today on the screen is one of the most interesting charts I've come across in the past several months. And on the same token, in my opinion, it's one of the scariest charts as we look ahead to 2025. And this is a chart from the famous Tom Lee, who is on CNBC all the time. I'm a big fan of Tom Lee, mostly because he's bullish seemingly all the time. And when he goes on CNBC, he's usually across from Scott Wapner, who tends to, in my opinion, give him a hard time or always second guesses everything he says. So it's kind of entertaining for a guy who's persistently bullish and a guy who continues to question his outlooks. And then we get to where we are today and sort of who's laughing now kind of thing. But what Tom is saying and what's important here, whether you believe in an individual or not, can predict the stock market. Anytime a bull is talking, or a bear for that matter, it certainly makes sense to at least hear their argument. And here's a good summary of Tom's points as far as getting up to the 7,000 mark. So he lays out the tailwinds. The first is what he calls a Fed put option, a belief that the central bank will do whatever it takes to prevent an economic or financial markets collapse as inflation eases and the central bank puts an emphasis on supporting employment. So reason number one that he's bullish is he's saying the Fed's not going to let this current fire go out, so to speak. Now, the second reason has to do with incoming President Donald Trump. He thinks policies from the incoming administration will lift business confidence and company earnings. He expects the animal spirits will return for markets boosted by these two reasons. So those are the bull points that get us from where we are today at about 6,000 up to 7,000. So somewhere after the midpoint, when we reach the 7,000 mark or so, Tom Lee is calling for really a significant dip. I mean, if this got back into, let's just say where we are today, 5,900, 5,750, something like that, that's a pullback from today's prices. And then we make a rebound into year end up to 6,600, which would still be above where we are today. Now, for me personally, as far as, why do I say this chart is so scary, besides the obvious dip that's mixed in there? The reason that it scares me a little bit is because you have arguably the biggest bull, at least on TV, who sees trouble ahead at some point. So this headline here kind of sums it up. He's no longer one of Wall Street's biggest bulls, and here's why he's cautious on 2025. So the next question, obviously, is what happens here? What is the rationale that brings us from, all-time highs back to under where we are today? As for the call that the S&P's fortunes will fade later in the year, Lee looked at history of back-to-back 20% gains, which we should finish the year with, in 5 precedents since 1871. For those 5 years, stocks fell in the following year, apart from one positive in 1996. All 5 precedents saw stocks do worse in the second half of the third year after those two 20% winning years. Bottom line, the first reason that he's cautious is because he sees some parallels in history, and he's basically buying in that has a good chance of happening again. The other downside revolves around Tom Lee's worry about a too effective, newly planned DOGE, Department of Government Efficiency, led by Elon Musk, who are aiming to trim $2 trillion a year from the federal budget. Tom says spending cuts could end up hurting economic growth, which could also be impacted if Trump carries through on import tariff threats. So the combination of potentially cutting government spending, even if it's, for efficiency purposes, and the potential for tariffs is the second point that could potentially bring the market down from all-time highs to a point that's lower than we're at today. Now, we always have plenty of reasons to be worried. When the stock market is up, there's always danger lurking around the next turn. But in my case, anyway, when the biggest bull expresses two very specific reasons why we could see a significant pullback, my ears certainly perk up to that. And if you've been following the market, so this is the SPY here on Seeking Alpha. This is a 5-day chart. We've had about a 2% pullback over the past 5 trading days. So not that big of a deal, but it was overexemplified in the media. And what was funny to me, you did have people who were very nervous while it was going on. And when you talk about bulls, and you talk about Tom Lee, this is from a couple days ago, right? Panic dip will be bought. Bottom line, this is a buy the dip moment, maybe more back up the truck moment. And the dip, so to speak, comes after he published this chart. So everybody's sort of looking at him. Stock market goes down, give or take 2%. And they're like, whoa, is this it? Is this your mid-year collapse that's happening now? And he comes back online and doesn't really say, no, it's not, but he does say, continue buying. It's interesting. And what I take from that is, perhaps this is good news, but we still have this to deal with. Now, in my personal opinion, if you're going to take this chart as gold and say, this is absolutely for sure going to happen, you obviously have a nice run up that to still be had. So if you hold riskier stocks, there might be some more play in there. But if you've made a big gain on a stock that, let's just say, the company is not profitable, there's no historical stats that support they will continue to grow over the next 2 to 3 years, at what point do you not just take the win, and realize that more than likely, if this were to happen, you'd have an opportunity to buy back in. So if you're up 50% on a small cap stock that's not running a profit right now, my 2 cents would be to take your profit, take your plus 50%, and see how the market opens, into next year a little bit. But this projection from one of the biggest bulls on TV, you should at least think about it, right? Like, how hot is the potato that you're holding? Can you dump it now and be satisfied, potentially pick it up again some point in the middle of the year? And of course, by that point, you'll have even more data on the company, more projections of which way their products are selling or not selling. So to me, it makes a lot of sense if you're in a very risky asset. Now, if you're in something like the SPY, the SPY isn't designed to be an in and out kind of stock. It's a long-term asset. The whole game with it is, that you're compounding over time and you're outpacing the cost of inflation. So I think if you have the SPY, I'll throw the QQQ in there. I don't think you change anything, but perhaps you're holding. And when I look at the top stocks in the QQQ, and this is just quant score and Seeking Alpha, you got a lot of yellow, which is a lot of hold. And valuations aren't exactly cheap. But the bottom line is, what's the hurry over the next 6 months? I would say no matter what's the hurry prior to the inauguration in the first few weeks of a new president to see how some of this stuff shakes out. All right, so that's my take on the most interesting chart for 2025, perhaps the scariest chart looking ahead to 2025. If you think about who actually made the chart. But I'd be interested to hear on what you're thinking, particularly as it pertains to the QQQ and this chart. One call out before we go. If you're interested in learning more about Seeking Alpha, stock research platform that I use all the time on this channel and is displayed right here, I have a great offer for you in the description. 7-day free trial, $30 off an annual subscription. Definitely check that out. Potentially support my channel as well. Thank you to everyone for watching. We'll see you on the next video.